Welcome to the FinGlam Finance channel. In this video, we will be reading and discussing some articles that we found very interesting. Feel free to leave a comment. Let's start reading the first article. In late June, Bitcoin experienced a small surge that helped it bounce back from $25,000 to $30,000. This has got everyone eagerly awaiting the next halving event. According to research analyst Matteo Greco from Finkia International, the closing price of $30,600 last week only saw a 0.5% increase compared to the previous week's closing price of $30,500. However, things took a brief downturn on Friday when BTC dropped to $29,500 after the SEC declared that the documents submitted by several companies for spot Bitcoin ETFs were inadequate. But the market quickly recovered as all asset managers resubmitted their applications. It's important to note that we are less than a year away from the next halving, which is scheduled for late April 2024. The halving event happens approximately every 4 years, cutting the rewards for miners in half. Currently, miners receive 6.25 BTC per block, but after the halving, it will decrease to 3.125 BTC per block. Historically, the months leading up to the halving have shown the start of a bullish trend in the market. This has caught the attention of many crypto enthusiasts, particularly for the second half of 2023. The upcoming halving in 2024 will be the fourth of its kind. The first halving occurred in 2012 and marked the end of Bitcoin's first cycle. It was an extraordinary period as the price surged from $0 to around $10 in just over 2.5 years. However, it was the following year, in 2013, that Bitcoin witnessed its first major speculative bubble, driving the price to approximately $1,100. The years 2014 and 2015 were challenging for Bitcoin, experiencing the worst bear market. However, in 2016, just before the second halving, a small bullish cycle was triggered. The price of BTC rose from $320 in November 2015 to $770 in the weeks leading up to the halving. Although it dropped to as low as $550 afterward, it climbed back up and closed 2016 above $900. The second halving in 2017 was followed by another significant speculative bubble, bringing the price close to $20,000. While 2018 presented difficulties, the price began rising again in 2019, anticipating the upcoming halving in the following year. It surged from $3,400 to $13,000, driven by the launch of Facebook's Libra project. Despite the global financial market collapse in March 2020 due to the pandemic, the price had recovered to $10,000 by the time of the halving in May. Excluding the pre-halving period of Bitcoin's early market stage, the price saw a 140% increase in 2016 and a 190% increase in 2020 before the respective halvings took place. As of now, in 2023, Bitcoin has already increased by 86% since the beginning of the year, leaving room for potential growth. However, the halving poses a challenge for miners as their rewards will be halved. It's worth noting that miners not only receive rewards but also collect fees. As the rewards decrease, the share of mining revenue from fees will gradually become larger, eventually reaching 100% by 2140. In response to the upcoming halving, Riot Platforms, a leading BTC mining company, has announced a substantial investment of $162 million to expand its mining power by acquiring an additional 33,280 miners. Bitcoin mining is a competitive field where those with more power have the advantage. As a result, small miners with limited resources may be overtaken by dominant players in the industry. This is due to the proof-of-work (POW) consensus mechanism shared by Bitcoin and a shrinking number of altcoins such as Dogecoin, Litecoin, and Bitcoin Cash. As pointed out by Matteo Greco, both Litecoin, LTC, and Bitcoin Cash, BCH, have experienced price increases of 29% and 54% respectively in the past week. These altcoins are also undergoing their respective halvings, albeit at different times than Bitcoin. Greco suggests that the recent performance of LTC and BCH indicates the current bullish sentiment surrounding the halving, similar to previous cycles. Litecoin, in particular, has often served as an indicator of sentiment for Bitcoin's halving, as it typically anticipates the event by almost a year. For example, in the months leading up to the 2015 halving, Lieutenant Colonel saw an 824% increase, and in 2019, it rose by 525%. Currently, Lieutenant Colonel is trading at its highest prices since April 2022, with its next halving scheduled for early August 2023. Considering the challenges faced by many altcoins, Litecoin's significant price surge suggests that bullish sentiment is growing ahead of Bitcoin's next halving. This was the text of the article, and now we will be commenting on it. The recent surge in Bitcoin's price and the anticipation surrounding the next halving have grabbed the attention of crypto enthusiasts worldwide. With Bitcoin rebounding from $25,000 to $30,000, everyone is eagerly waiting to see what the future holds. Matteo Greco, a research analyst from FineKia International, sheds light on the modest 0.5% increase in Bitcoin's closing price from the previous week. Additionally, the temporary drop to $29,500 following the SEC's announcement regarding inadequate documents for spot Bitcoin ETFs caused a brief scare. However, the market swiftly recovered as asset managers promptly resubmitted their applications. We're less than a year away from the upcoming halving, scheduled for late April 2024. This event, which occurs every 4 years, cuts the rewards for miners in half, reducing them from 6.25 BTC to 3.125 BTC per block. Historical patterns indicate that the months leading up to the halving often witness the beginning of a bullish trend in the market. As a result, many crypto enthusiasts are keeping a close eye on the second half of 2023. The upcoming halving in 2024 will be the fourth of its kind. The first halving in 2012 marked the end of Bitcoin's first cycle, while the one in 2016 triggered a small bullish cycle. The subsequent years saw significant price movements, with Bitcoin experiencing both major speculative bubbles and bear markets. Despite the challenges, Bitcoin's price has shown remarkable growth in recent years. Excluding the early market stage, the price surged by 140% in 2016 and an impressive 190% in 2020 prior to their respective halvings. In 2023, Bitcoin has already witnessed an 86% increase since the beginning of the year, leaving room for potential growth. However, the halving poses a challenge for miners as their rewards will be halved. On the bright side, miners also collect fees, which will constitute a larger share of their revenue as the rewards decrease. Riot Platforms, a prominent BTC mining company, has already announced a significant investment to expand its mining power, preparing for the halving and maintaining its competitive edge. Bitcoin's halving not only impacts miners but also influences the altcoin market. Litecoin and Bitcoin Cash, which share the proof-of-work consensus mechanism with Bitcoin, are currently experiencing their own halvings. The recent price increases in Litecoin and Bitcoin Cash indicate a growing bullish sentiment in the market, mirroring past cycles. Litecoin, in particular, has often served as a reliable indicator of sentiment for Bitcoin's halving, preceding it by almost a year. Its impressive price surges in previous halving cycles further emphasize the potential impact of Bitcoin's upcoming halving. In conclusion, the cryptocurrency community eagerly awaits the future trajectory of Bitcoin's price as it heads towards the next halving. With historical patterns and recent market movements, it's clear that the halving event holds great significance and has the potential to shape the market dynamics. We are excited to share this information with you and create a community dedicated to financial growth. Let us know your thoughts in the comments as we continue to explore the vast world of finance together. Subscribe to our channel to stay informed and feel free to share and comment on all our videos. Thank you for your support. Attention! The information provided in this video does not constitute financial advice and is not intended to provide any form of financial guidance. The opinions expressed in this video are personal and may differ from those of financial experts. Any decision you make regarding investments will be your own decision. We do not intend to influence your decisions in any way. If you decide to undertake any investments, we recommend consulting professionals in the field. Before risking your financial capital, conduct your own research. Financial markets can be highly volatile, so if you choose to invest, do so with caution. It is important to be aware that financial transactions are often risky and can result in the loss of your entire invested capital. Never invest more than you can afford to lose. Past performance is not indicative of future results. Financial knowledge is essential. Be aware of your goals and abilities before investing. Conduct thorough research and verify sources before making financial decisions based on this video.